Maya Afilalo here, managing editor and analyst for autoinsurance.com. Today we're talking about Direct Auto, which is a company that specializes in high-risk drivers. We'll talk about pros, cons, ways to save, and more. Direct Auto is a high-risk provider, meaning it specializes in insuring drivers with violations like DUIs, insurance lapses, drivers who need SR22s, and other high-risk categories like having low credit that can count as high risk. Direct is available in 15 states, mostly throughout the South and the Mid-Atlantic. I've listed all the states in which it's available in the video description. You might have even seen one of the company's brick and mortar locations. They often pop up near DMVs. If you're looking for quick, convenient insurance and you're struggling to find it elsewhere because you have a high-risk designation, you can easily buy a policy with Direct. You can also pay for your insurance policy in cash at one of these locations, which you can't always pay for insurance in cash. And if in-person isn't your thing, Direct also makes it easy to get a quote online. We tested the process out ourselves, found it fairly straightforward to get an online quote, and you can also speak to an agent if you'd like guidance or you have any questions throughout the process. So like any high-risk insurance company, Direct Auto is going to be more expensive. We found its average cost for full coverage were 29% over the national average, and minimum coverage was nearly double the national average. Now, high-risk drivers are going to have to pay more for insurance no matter what, and sometimes rather than rejecting you outright, a standard insurance company like a State Farm or an Allstate will quote you an exorbitantly high rates. They won't reject you, but they'll make insurance effectively impossible because it's so expensive. If you are struggling to find an affordable provider, Direct is worth a look. On the other hand, if you have a clean driving record, decent credit, you can likely find cheaper insurance elsewhere. Now, you may be able to lower those costs. Direct offers over a dozen discounts that can help you save. Its biggest discounts are for insuring multiple vehicles in the same household on one policy, and for having prior coverage, meaning you've been insured for at least 6 months with another company, and you've never had a lapse of more than 90 days, and I'll talk about that more in a second. Both of those discounts will save you 25%. You can also get a 25% discount for being an active military member, although if you are in the military, I would recommend checking out USAA first. I just want to take a second to explain, why does Direct have a discount for previous coverage? Insurance companies like to see that you have a history of continuous coverage because it demonstrates that you are not driving without insurance. So the longer your history of coverage, the lower your premiums are going to be. If you don't own a car, you can buy a liability-only non-owner policy, which are typically pretty low cost, and that'll help you maintain that history of coverage. In terms of coverage options, Direct has about what you would expect from a high-risk provider. All the coverages you might need, like liability, uninsured motorist, medical payments, personal injury protection, comprehensive collision. You also have some roadside assistance and rental reimbursement. But a high-risk carrier is not going to have extras like rideshare coverage, gap coverage, or accident forgiveness. You won't find any of those add-ons with Direct. When it comes to claims, unfortunately, we don't have a ton of third-party data on Direct because it's a relatively small company. It has a slightly higher ratio of complaints according to the National Association of Insurance Commissioners, and some customers have complained about the claims process. They say it was difficult to communicate with adjusters, it took a long time to get settlements. Unfortunately, high-risk carriers do tend to have lower customer satisfaction scores than standard carriers, so this is something to keep in mind. At the end of the day, Direct is best for drivers who are having trouble finding affordable coverage from other providers. And it's also a good option if you want to take advantage of those brick and mortar locations and maybe even pay in cash for your insurance. On the other hand, if you have a relatively clean driving record, decent credit, and you're able to find an affordable policy from a standard provider, Direct probably isn't the best choice for you. Bottom line, Direct is a high-risk provider. It's available in 15 states. If you're struggling to find affordable insurance from a standard provider, it's worth checking out Direct. They can get you the coverage you need, and once you've improved your driving record, eventually you can switch over back to a standard carrier. That's all for now. Thanks so much for watching. If you found the video helpful, please hit like and subscribe, and check out the other videos on our channel for more reviews and tips.